What is your target? What's your benchmark in terms of the target that you think is reasonable in this day and age? What does that do to your budget, and how do you invest against it?
Right. So our target is 7% over the long term. And currently, those capital market assumptions for both the 10-year and then the actuarial assumptions in the long term at the 30-year mark have both come under 7%. So obviously, we're quite concerned about the current positioning of the portfolio. We will be leading our board over the next 12 months through our asset allocation and liability management cycle, where we will be looking at how to deploy this capital across the various asset classes. Meaning diversification continues to be extremely important to us. We are primarily passive on our equity side, our public equity side of the house. But we have to take a stronger look at private equity, see if we can increase our target allocations both in private equity and private credit. And then the other part of our investment strategy would be to look at putting leverage, some amount of leverage, prudent amount on the portfolio itself. Right. But again, long-term investors, and we have to be really thoughtful about short-term disruptions, but the long-term macro trends or micro trends are going to be much more important to us.
Well, Marcie, let me ask you about that. And you just mentioned private credit and private equity. Your former CIO, Ben Meng, who departed last month, and we can talk about that in just a moment, but he had been a great champion of moving more of the money into private equity and private credit. Has that strategy not changed at all? And do you imagine it may, depending on what the mix of your team ultimately looks like?
Yeah, the strategy really is not going to change. It really is a CalPERS strategy. Certainly was being led by our former chief investment officer. But CalPERS has had a pretty significant allocation to private equity for a couple of decades. Went into that asset class, I would say, in the early to mid 80s, similar to Washington and Oregon systems. So we understand the importance of private equity to the portfolio. It's one of the asset classes that is expected to earn greater than the 7%. So we need to up the policy target to that asset class. The policy target today is around 8%. And so really the challenge for CalPERS is to continue to work with our general partners in the private equity space to find those deals and find those opportunities to partner together to improve the pacing. We've had a little bit of inconsistent pacing during fundraising that has really, I think, harmed the returns. We had at one point stopped our co-investment program. We want to get that restarted and have gotten that restarted immediately. That helps with some of the fee drag. And then also the diversification of the way that we invest in private equity. We really have not done much in the growth space. We've done more in distressed, for example. So I think it's less of a byproduct of the departure of our chief investment officer, more of the fact that CalPERS has to have exposure to that asset class in order to hit its return target.